everyone, welcome to Trade. Today we are going to be seeing how to use support, resistance and trend lines for taking better entries along with CPR. And if anybody is new to my channel and if they are new to trading as well, if they want to learn more on CPR, please watch this CPR logic for intraday trading. This video is mostly a follow-up video of this. How to take entries based on this four logic. This four logics works really well. CPR is just an indicator, a leading indicator where the support resistance are marked. So we trade based on it. All four logics are explained. And in playlist under learning section, there are some good videos based on support resistance. You can have a check over there as well. So before we go and see the charts, right, and how to take entries, and what are the most important candles for taking entries. Before we see all that, in brief, I'll just explain what is support, what is resistance. I'm just writing the short form because I'm using my mouse. So, and what is trend lines. Okay, I'll just explain this in brief, then we'll go on to the chart, see some examples and do some back testing. Okay, firstly, let's consider a resistance. What is a resistance? A lot of you might know it, but for somebody who's new to trading or new to my channel and new to support and resistance, if they want to learn, it is good for them. Now consider the market is going up. Okay, at some point it stops and then the market starts reversing on the downside, either Nifty or a stock. It can be anything. Right, so this point where any price action that reverses is called resistance. I'm going to put that in black. So this point where the market reverses, the market was going up, at certain point it reversed, that is called, we refer that point as resistance. Okay, now the market is coming down. At some point, see, not every stock continuously falls until it becomes zero, right? At some point it reverses. So the point at which a stock or Nifty, Banknifty, anything stops falling, and at one point it starts reversing, right? So that point is called as, we refer that point as support. Okay, and the price can take resistance almost twice at the same place. Again, it can come to this resistance area and start falling. There's a chance again the price can come to the support area and then start going up. Okay, so these places where the price takes resistance more than twice or more than once, we refer it as a level where there is strong resistance. And the same thing on the downside, when we are reversing, if the price has taken support at multiple points, right, we refer it as a strong support area. Okay, now let's see what is a trend line. Okay, before trend line, right, let's just see the break of support and resistance. Now say we have a good resistance line drawn, a good support line drawn. The market, say it goes up. Okay, it fails. This is a good resistance we have drawn. Okay, it fails, comes down, then again the market goes up. Again the market goes up, takes resistance at the same level. Again it comes down. Then probably the third time, final time, when the market goes, it might break this resistance, right? And then the market starts making a new high, right? So we'll see which candles are important to show it is breaking the resistance and stuff before in the charts. So this is called as a breakout. So when the resistance breaks, a good resistance breaks, right, that is called as we refer it as breakout. And the same thing on the downside. If the market has taken resistance support multiple times, and say one final time it comes and breaks the support, good strong support, we refer this as breakdown of the support. I'll be showing more examples on the chart along with the trend lines and how we can enter. So when do we enter the market, go long or short? Okay, say this is a good resistance line, this is a good support line. If the market breaks a resistance, that's when we go long, like we buy. If it is Banknifty, we buy futures or options, whatever. And if a good support is broken with a good candle, that's when we sell or go short in the market. Fine. Now let's see what is a trend line and how can we draw a trend line. I'll be showing you the same thing even on the chart. Now consider a market is going up. Okay, it's continuously taking support at a particular line. Okay, we refer that as we can draw this type of a trend line. I'm putting the trend line in blue. This blue line, I'm going to mark it as a trend line, call it as a trend line. So the market keeps taking support on this trend line and keeps going up. And finally at one point it comes down and breaks this trend line with a nice good bearish candle. We'll see what type of candle is that. From then what happens is the market starts falling down. So we refer this when it's taking support along a trend line and then it breaks. We refer this as trend line breakdown. And then at this point when the trend line breaks, we can sell. Okay, or go short in the market, or in a stock, probably intraday we can sell. And this support, resistance and this trend line identifying in trading is the most basic of the trading. So the more you practice, more anybody practices, it will be really helpful. In the initial days I had tough time just understanding support, resistance, but it finally helped me. Even today I sit and draw trend lines throughout the night. Now consider a market where a script or Nifty, Banknifty is continuously falling along taking resistance at a trend line. Now when it's taking resistance, it has to take resistance on the upper side, right? So we can draw this trend line. So what is happening until now, the market is taking resistance here, coming down, taking resistance along this trend line, coming down, taking resistance, coming down. Finally, at some point, based on some news or whatever it is, the market with a nice big green candle breaks this trend line and then it starts going up. So we refer this as trend line breakout. And on the downside, we refer it as trend line breakdown. So this is just a simple explanation of support, resistance and the trend line. We'll be seeing the same thing on the charts now with examples. Before we go on to the chart, I just want to show there are many candlestick patterns and many candlesticks many people use. What I use, okay, this video is just about how I take a trade and what I see in finding out the support, resistance for intraday, right? So what I use is, what I look for is this hammer. This is nothing but a green body with a long wick on the downside. This is referred as a hammer. I'm just putting the short forms. And this type of candle where you have a red body with a long wick on the upper side is called inverted hammer. And this candlestick pattern is called evening star, which is bearish. Why bearish is, I'll be showing you. See, the market keeps going up. At some point, at a good resistance, the bullish candle will end, there'll be a doji, then a bearish candle will come. So this type of pattern is called a evening star. After this, the market usually goes down. And the same thing over here, this is called as morning star, where if a market is continuously falling at some support, it makes this type of a pattern, a bearish candle, a doji and a nice green candle, and then the market starts reversing and going higher. The other type of candlestick patterns that I look in for intraday trading is like this: a good bullish big body green and red candle, probably with a small wick on either side. You can have a small wick over here, and the same for the red. You can have a small wick on the upper and the lower body. Okay, now why am I showing this candlestick pattern is, now I told you about support and resistance, right? Now I told you about resistance on the upper side, support on the lower side. Now say the price comes, okay, until this resistance. Now how do we know that the price might reverse? What type of bearish price action can we see to know that the price is going to reverse and not just breaking out? So if we see this kind of an inverted hammer at a good resistance, okay, this is a bearish candlestick pattern, inverted hammer. If we see this inverted hammer at a resistance, most likely the price is going to reverse on the downside. And the same thing, if we see an evening star, at a resistance, okay, most likely the price from this resistance, it will start reversing. And the same thing on the, and a good bearish red candle at this resistance. If you see a good, like the candle that I marked here, good bearish red candle, most likely the price will come here. So this is, and from here, after forming this nice bearish candle, most likely it will continue. And obviously we'll be keeping our stop loss. It's not necessary that if evening star comes, the market has to reverse, right? It can again still go higher. So we'll be using this resistance line itself as the stop loss in case we go short. And the same thing on the downside, if the market keeps falling, we have come to a good support. Now we want to enter. Now you know there's a good support, okay? Now I want to enter and I'm expecting a reversal. Now what kind of candlestick I'll look for is this hammer. It's a bullish candlestick pattern. Look for some kind of an hammer. I'll look for an hammer at a good support. Then a follow-up candle should go above this hammer. Then probably I'll enter with my stop loss as this support line itself. If one candle goes up, the other candle comes down, I'll still wait. If a candle closes this below the support line, probably I'll take my stop loss. And another thing is this morning star. When the market is falling over here, it forms this morning star candlestick pattern like what I've shown here. Then most likely the market will reverse. And I'll keep this low of this morning star setup as my stop loss. For evening star, I'll keep the high of this evening star setup as my stop loss. Okay, so this is what support, resistance and the trend line that I explained. Now let's just see some examples on the chart. I'm just going to remove these drawings along with CPR. So that's why I mentioned that if somebody has not seen the CPR logic video, just go and watch just about 4 logics. There are many setups in CPR, but what I have explained in this video is just 4 setups. So you can go have a check on that. It's pretty informative. Now this I'm on a 5-minute chart. I have the CPR indicator. If anybody wants to know how to add CPR indicator, just go to indicator, type in CPR. You will find n number of CPRs that you can use. Everything gives the same value. It's just how you can go to the settings and even change the value. The CPR that I'm using is just custom made. It also shows tomorrow value. It's nothing great. The only advantage is it just shows even tomorrow values, which is advantageous. That's it. Now we'll go with the most recent example on Friday when the market started falling, right? So where all we could have entered on Friday and where all we could have exited. I'm just going to see that. I'll always have this, say in today's chart for Monday, I'll have the previous day high also marked in my CPR, but for historical, it will not be marked. So for our explanation, I'm going to use the black line as the previous day high. See, for Friday, the previous day high is this Thursday's high point, that is 39,400, and the low point is previous day low. The black lines are previous day high, previous day low on either side. Okay, so Now, how I took the short trade on Friday, I'm going to explain. It's just basic, simple. I'm not saying any complicated. Though I do know quite a lot of indicators, it's not that I use everything every day. I don't use most of it, just purely based on price action trading. Now, on this 5-minute chart, okay, and we also had this gap that needs to be filled, right? That is there in my analysis, all my analysis video is there. So that's why even pre-analysis of the market is important. Before the market opens, you analyze. See, if I hadn't marked the gap, okay, if I hadn't had this gap marked and I'm over here and I'll not know where to score, I'll be simply waiting until this S2 of the CPR to hit and the market starts reversing, right? So always even see the price action. So there was this gap. Gap also acts as a good support and resistance. How it acts as good support and resistance is the upper boundary of the gap, right? The upper boundary of the gap and the lower boundary of the gap can act as support or resistance respectively. The price can come reverse from here itself, or it can come fill the gap and then reverse. That's exactly what happened on Friday. See, did I short right at the opening itself because I saw an evening star? See, even though there was many good opportunities to short here, right? I could not take a short here because I was waiting kind of a structure or a trend line to break down. For option buying, see, option selling, you can take a chance. You see this nice like an evening star, what I showed in the diagram. Okay, you can go and sell at some good resistance. There was some good resistance here. You can sell options and just sit. But option buying, when that actual momentum comes is when we get this kind of a structure break. And the time frames that I toggle between is 15-minute and 5 minutes. When I was seeing the 15-minute candle, it was a nice, like a tweezer candle, nice bearish inverted hammer that came. But still, I could not take an entry here. I was looking for some kind of a trend line to break, or the previous day. All the previous day low, all those logics are explained in this video. You can go have a check. So basically what happens is, if we are above the CPR, this center 3 lines are the CPR, right? So if we are above CPR, most likely we are bullish. If we are below CPR, we term it as a bearish day. But when we take a short, if S1 or the previous day low breaks, okay? But I didn't even wait on this day until the previous day low broke. Now on this 5-minute chart, I missed this. Like, obviously if I'd short here itself, I would have made more money, but we take safe entries, right? And it's not like the kind of entries that I take, my stop loss never hits. Even my stop loss hits, I'll be showing you those trades where my stop loss hits in option buy. Now for this day on Friday, I had this kind of a trend line. When the market came here, right? When the market came down again, when retested CPR. So the moment we came down below CPR, I was kind of in a view that maybe we can be bearish. The previous day low or the S1 will break. I had this kind of a trend line marked when this market was, when these two price action happened. See here, it was almost like a good morning star. Okay. I'm going to expand the screen. See, at this point, the price action was like a good morning star price action. But did I go long? No. Why? We immediately had CPR. The CPR itself can act as a resistance, right? If this had formed above the CPR, then I would have taken an entry. So even though we had this kind of price action, I had drawn this trend line like this, connecting. See, for trend line, you need to connect more than 2 supports or more than 2 resistance to form a trend line, right? Just these 2 things I cannot draw and keep it as a trend line. So it was taking support more than twice. Once here, from here it started 1, 2, almost 3 times along this trend line we had taken support. And yes, equally on the upper side, I had kind of even this line marked. See the beauty of the trend line, right? When you properly connect the trend line, how many times we have taken resistance, how many 5-minute candles have taken resistance along this trend line. So I was kind of having this view, the trend line on the upper side and the trend line on the bottom side. the moment this big candle came, right, this was the best entry. See, I entered over here because of VMA is another thing, and we were very close to the CPR, and this price action like kind of was pretty satisfactory for me, like an inverted hammer at the CPR. See what happens when the price breaks down a certain support or resistance, right? CPR, it went, retested CPR, came down, again it went to retest. So this was a good price action for me to short. I shorted. But the best entry based on technicals was here. When this trend line broke, if you had entered, you got a beautiful fall. This green dotted line you see here is the CPR. Let me see if I can just increase the... Let me see if I can just increase this so it'll be more clearer. So the green dotted line that you see was S2. Before that, most importantly, what convinced me to stay in the trade is the previous day low. The black line is the previous day low. This previous day low broke, so I was convinced we'll hit S1. The moment S1 hit and we started breaking down, I was convinced this gap will get filled. Exactly, it came. If you see actually the gap perfectly when you draw, it's right here. It exactly came and hit the gap, and I booked my profits here. Now it went up and came again, right? Yeah, obviously if you wait trailing stop loss, we could have done that, but I exited, and that's it. This one thing was my trade for Friday. If this, because why I exited here is because of this candle. Why I didn't stay in the trade? How come I didn't know that the trade, this gap also is going to break and we're going to hit S1 is the first line. Why I didn't wait until S2 is this price action. I did mention previously in the video that look for this bullish price action. So this type of bullish price action shows some reversal, right? And see, we got a nice reversal. But the bigger pattern is bearish, so we don't have to go and buy. But this type of price action, we can exit our profit. We nicely got good move from almost from 39,000 until 38,006 for almost 380-400 points. I was able to catch in options. See, this was a tricky day, but all the support resistance, whatever we drew, everything worked. But I was able to take only one trade. I'll tell you why. See, the moment the market opened, okay, we were kind of always, that's why a lot of people who are experienced in the market still, the opening trade is you can make money, okay, you can short here and book at the CPR, all the reversal logic happens in the first 15-20 minutes. We can make money, but it's very risky. So that's why a lot of people say wait at least for an hour or two, see how the market is going and then take a trade. So this is the CPR, right? The price on, this is on Thursday, I believe, right? Yeah, Thursday. The price was within the CPR range. So the time the price came here, it took support at exactly at the CPR pivot. That's why the CPR levels are important. So even if not for the CPR, see, the price took support here first time. So what I'll do is I'll just mark a support line. But will I enter immediately? No, I'll mark will keep support in, let me see, blue. I'll mark a support line. Again the price went up, took support at the same area. Again the price. So the more it's taking support, if we get a break of this, it's most likely to break down even harder, right? Again the price was taking support. By here we had a nice trend line that was formed. The price took support on this trend line 1, 2 over here, and all along we could not break this trend line. Okay, and the next thing that the CPR indicator gives us is the previous day high and the close. So where would have been the previous day high is here. I'll put previous day high in black, and previous day low for this day, for for this day, the previous day low was here, correct. So this is for 3rd Feb, so the previous day high will be 2nd Feb and the previous day low of 2nd Feb. So now without CPR we had this price action, but during the live market we'll always have the CPR marked. So the moment this kind of the CPR, this trend line broke and the CPR, so usually within the CPR we remain sideways, right? So the moment this break came, nice bullish candle came, even after the CPR and this trend line broke, we could have entered. I entered when this trend line broke, okay, and this immediately the CPR broke, and my stop loss would have been the trend line itself. If the candle had gone up, come back inside this trend line, I would have exited my position. I waited, okay, I waited, the market went up. I thought we are going to break this previous day high and we are going to go hit R1 39,500. But when I exited, immediately when I got this, see, obviously until here I was in very good profit, but I exited over here. Why? After the price action, the 5-minute candle, when it closed, see how it closed like an inverted hammer at previous day high. Always previous day high and previous day low acts as good support and resistance as well. So when this candle came, immediately I exited. And obviously those who want to take more risk can immediately short, thinking that from previous day high it's going to reverse. I didn't short immediately. After like 1 or 2 green candles, I shorted until CPR, and that was it. I didn't want to trade more, but obviously this, if it was a regular day, even at 250 I would have shorted, but this was an expiry day, 3rd Feb. So after 3, it's quite risky. I don't, not everyday trade after 3, every expiry. So kind of avoided it because I already got 1 good trade on the upside, 1 good trade on the downside. Now looking at this fall also, right? See, this is blue is the support line that we had drawn. In the morning we were taking support here. And this price action is choppy. We cannot conclude anything. It's breaking up, breaking down. If you had entered short, our stop loss would have hit. If you had gone long, our stop loss would have hit. That is due to expiry. It was very choppy. I agree. This is a very tough price action to trade. Okay, even if I had entered, now say thinking this trend line broke, if I had entered here, immediately I had to take stop loss here, thinking it might reverse. If I had, after this candle, if I did, I would have taken immediately stop loss here. But finally when this kind of range again broke here, right, that's why we keep checking for kind of a range for the market to form, a range, or what we refer it as structure to form. This kind of trend line was there even on this 5-minute candle. A small trend was there. When that broke, again we got a heavy selling on the downside. Obviously this selling was a little risky because after 3 expiry it's quite risky, right? Any other normal day we can take. The moment the CPR leaves, I would have taken a short with the CPR itself as the stop loss. Now coming to this day, see, this is the day where my stop loss hit, even though all the technicals, everything I had followed. See, one of the logic that is there in this video is if R1 breaks and the previous day high breaks, most likely the price will hit R2. It did hit R2 today. It did almost go to R2. See, this is R1, R2. It almost went near R2, but it was very choppy. It was difficult to buy options. Why? I'll tell you. We had previous day high here, the previous day low, and this was the budget day first. So previous day was only the budget day. Low was very far away. This black line was the previous day low. So when the market opened, the first 5-minute candle itself gave us good profit. We did some small scalping in this candle, like the moment the candle opened, right, when we started going above the previous day high, we started scalping until R1. And where our big trade stop loss hit, where we thought we'll get a bigger breakout is, so this is how we were at around 11 o'clock in the market, right? So where all we had the trend line is, we had this trend line kind of connecting these 3 points. If this had broken down, we were planning to short. and we had this trend line. See, trend line doesn't have to be a slanting trend line, and even horizontal lines can be referred as trend line. Okay, so we had this. The moment this candle came, we thought this is a nice, good breakout. So we entered again here. Okay, and since it was next day after the budget, still the premiums were in a couple of strike prices. The premiums were decaying. We got this nice move until here. Okay, we were in profit. Immediately this red candle came and we had to exit cost to cost. It was almost showing loss because of the force of this red candle. We exited, we took a stop loss. See, one is you can have a technical stop loss, or you can go cost to cost. That is, if your PNL is going to become minus 30, 40, you can even starts going in negative, you can take a stop loss. That's what I do. See, what I believe in, okay, this is just my personal thought. This might not be the right way of doing it. What I believe in, I'm ready to pay 200 or 300 extra for brokerage, but I don't mind taking a stop loss and re-entering. Now, I'm buying options. If somebody is trading in futures, they can afford to wait. Okay, if I'd taken a future entry here, like whichever lots, if I'd taken Banknifty future here, I can keep this, even this low as this candle as stop loss. Okay, so until the market goes up and comes down here, I won't be in loss. But in options, the moment it starts reversing in this red candle only, we were in loss, so we immediately had to exit. So in futures, I follow properly the stop loss based on the technicals and the candle. Like if I'd entered here, I'll keep my stop loss as the low of this candle and stuff like that. But in options, I try and exit cost to cost. There was no support, nothing for me to, like a resistance, no indication that I was in very good profit. Okay, the moment these three candles came, but there's nothing for me to exit. There was no previous price action also much, right? So there's nothing for me to exit. So I waited, immediately took this loss and stopped trading for the day. But after that, we found another good entry, but it was difficult to enter. That is, kind of this flag was formed, and after this breakout, we could have entered. We could have made nice money. And obviously over here there was monthly R1. If I just put on the monthly pivots also, there was monthly resistance here, same place where we took resistance even on the 3rd. The monthly resistance came and easily we could have booked profit, but we could not enter because this candle was a pretty big one. So even if you had to keep stop loss at this breakout, right, it was too far for options. So the best entry for option scalping is see where your stop loss can be as minimum as possible. This was too wide of a stop loss for option buying. Again, futures buying and option selling. See, after this candle, if somebody had sold options, put options, 39,100 put, if that sold, seeing this big candle, they would have been in good profit for intraday. For futures also, even here, if you had entered futures, 39,240, futures and option selling is more safer than option buying. Option buying, a lot of risk is there, but yeah, you can make money. So you need to be very agile in option buying. Agile in the sense, there are sometimes we exit our options trade in less than 3 minutes. Okay, that is how option buying is. It's a very agile game. We need to be very quick. So even if we entered here, we keep our stop loss here. It was too far away, so we refrained from entering, but got nice move. And if somebody had entered, right, a good exit would be after this bearish candle at a monthly pivot. Now, how to add this monthly CPR and all that, you can go search the many indicators which give, if you just type CPR, many free indicators which give monthly, daily, weekly CPR levels. What I use is again just what is customized. It is not advertised in TradingView. We won't find it. Now let's ignore the budget day. Budget day was a news-based move. So though we can draw all this kind of the support, resistance, but it was very difficult to trade, especially the premiums being very high. So let's just see this example and a couple of other examples little far away. Okay, this is very recent examples, right? Let's just go somewhere far off. Okay, I'll just show you this because this is one trade that we took and worked beautifully. Now just assume for 24th Jan, okay, 24th Jan, I'm not turning on the CPR yet. Usually at the start of the market itself I'll have CPR, but for now I'm just turning off the CPR just to understand and see how we build a view. See, in the morning we came down, kind of formed this wick. So what I'm going to do is mark a support where this wick is. You can even either use the trend line itself or even this kind of a zone extend, right? It gives you, so we know that this wick over here is probably having some support. That's why the market bounced from here. And in the morning opening candle we had reversed from here, 37,690. So say I had a trend line over here. Trend line is going to be in blue. Okay, then the market came here, we were hovering in this region. Okay, the previous day low for this day, we are looking at 24th Jan. So the previous day low, I'm going to mark the previous day low is here in black, and the previous day high is here, this point, right? See, previous day we are seeing previous day 21st Jan. 24th was probably a Monday, so 21st Jan Friday. And we had some morning itself, we had taken some resistance here, so we kind of came below the CPR. Obviously we did some scalping here, but that requires a lot of experience. The best trade, I'm showing you the best trade, was when again the price came to this support, right? We went up, and by then, by around 11:30 in the market, we kind of had this trend line, right? All along we had this trend line. We took support once, we took support twice, and if this trend line and CPR had broken, yeah, we would have traded even, we would have thought of going long. The moment this nice bearish candle broke this S1, right, and it came close to this previous day low, we were kind of convinced that this breakdown will happen. We immediately took a short, and our first scalp we got out at this, I think this is weekly S1. Yeah, weekly S1, we got out where this CPR pivots are there. Again took a short here. Again kind of took a short here and made some nice money in the fall. See this type of, the reason for showing all this trend line support resistances, see the market was falling from morning, okay, from 37,000 on this day, 37,700 the market was falling. When that spontaneous fall comes for options, right, is when kind of a trend line breaks, and whether if S1 of CPR breaks or the previous day low CPR break, that's when it's a strong opportunity for buying options. And the same thing on the upper side, if a trend line breaks or previous day high breaks, or if R1 breaks, we get a strong momentum on the upside. That's when we can enter. That's why always for buying options, wait for some kind of a trend line to break, and that trend line you will have to mark by connecting at least 2 points which have taken support or resistance, and then see if you get a breakdown and then take a trade. Now some of the good examples, if we check, see on daily basis this happens, the trend line breaks on the upside, trend line breaks on the downside. Now just remember this day where we had this nice fall. Okay, I'm going to turn on this. We had CPR R1 R2, okay, and this was one of those days where I made a funny video on Instagram. See, we kind of had this trend line. Okay, since the CPR is, the lines have made it dark, I'm just going to put it off for now. So in the morning itself we had this range where it was taking support here. If the support had broken, we would have shorted in the morning, and on the upper side we were kind of taking resistance over on this trend line. See, the moment this broke, and we were also within the CPR. The moment the CPR broke and this slanting trend line broke, we got a nice move on the upside. Then the moment this R1 broke, right, we started scalping until R2. Here we took a huge loss. Why? Because we didn't wait for any other trend line to break. The moment we saw this inverted hammer, thought the market might reverse, we immediately shorted. There was also a monthly pivot here. But what happened is this green candle came and took away all our profits. Then we waited. Then again we took a short when kind of this trend line broke. So the moment we took loss here, again when this trend line broke, we kind of took short and exited over here. And in options, it's always best to exit as soon as possible, right? There's no point in waiting for the entire fall. See, in option trading, if somebody had bought futures, they can wait. If you buy futures, if you short futures here and keep your stop loss over here 38,800 itself, you won't be in loss. In options, you can't keep your stop loss. You need to keep trailing and booking profits. See, the best was if we had waited, and again see here we kind of formed this evening star kind of a pattern and then started falling. So this was a fall of almost 800 or something, almost 600 points. Okay, in option buying, if you can capture even half of this, it's more than enough. You don't have to wait for the entire trend to take place. So these are some of the few examples that I have, and this trend line also works beautifully. The video has already become too lengthy. The trend line works even on bigger time frame. Now if you consider a daily chart, see the kind of momentum that we got when this trend line broke. That is this kind of this. So we came down, we were taking twice, we took resistance along this trend line, came down wherever. And why did this support come? All this is there in my analysis. I'll keep telling support, resistance. See exactly here. Somebody last black is previous day low. Okay, I'm going to make it blue. I had some support here previously, so I marked this as my support. Why? So many times we have taken support, 1, 2. Here we have taken resistance. So this is a strong point. Exactly, the market came, took support here, and I had this trend line marked. So when we broke this, see the kind of momentum we got on the upside. So this is how we can, even on higher time frame, analyze using trend lines based on support and resistance. Now this higher time frames, you can use it for stocks, right? We don't have to do intraday trading in the stocks, but for like say investing and stuff, obviously Banknifty we won't be investing. Now just consider a random pharma stock. Let's see how a trend line we could have traded. See, this type of price actions are beautiful. Okay, what is beautiful is when a certain range breaks. What is that range? Over here, when kind of this range broke, right, like a flag and pole pattern, when you draw it properly. See over here it broke, came, retested, and then we got a nice move. And if for short-term traders who trade like for few days, say we had this nice support drawn, and over here also we had kind of this support drawn. Okay, and we had kind of this trend line drawn. The moment this opened above this trend line, it was a break of trend line. Even on this day, see, it came and tested kind of this trend line, started shooting up. So this is how we can use trend lines in intraday trading and for positional trading. This is just one part of trading, but hope the examples that I gave for intraday trading was a little helpful. This is how I see my charts. I'll only have CPR where I have the monthly, daily and the weekly CPR. At the max, I might have RSI just to see if there's a divergence or if RSI is above 60, below 40. That's it. Other than that, I don't use any other indicators. And I use this Camarilla pivot but that is an entirely different kind of a setup where probably I'll make another video, the Camarilla setup that I use. So these are the only three things that I use. One is CPR, I use RSI and this Camarilla pivot. Obviously there are other indicators which I know, but not on a daily basis I see. So this is another beautiful example where we kind of broke out of this nice trend line. This is on a 15-minute chart I'm showing you. We left the CPR and got a nice move on the upside. Now just turn off the CPR, and before we close, we'll just see only few examples where the trend line broke and for intraday and we got good move. Every alternate days a good move comes where a nice trend line breaks. See, on this day when kind of this trend line broke, we got a good move on the downside. This is the example that we saw. Let's go a little more behind. See, even here in this recent all-time, when the recent high, we kind of broke the structure. We came down, retested, and then got a nice fall. In 5-minute chart, it will be more clearer. See, on this day we got this nice up move, right? Before that, we kind of had the structure break, and you see CPR. We were kind of like, this was probably a no trade day because we were within the CPR. A good entry was break of the CPR, but it was almost 215, right? You would not want to enter over here. This pretty wide CPR and this trend line broke. Somebody could have taken a chance, but this so much wide CPR, we generally try and avoid it. So these are the days where the CPR logic worked beautifully, where we broke R1 previous day high and we just kept going up. See, on this day when the up move started on the previous day, we could have kept this resistance and kind of this line as the support without using CPR, and when this broke, we got a nice move on the upside. And the same thing even in a higher time frame. So these days it was pretty good, where we kind of broke out of this range and started getting a good move on the upside. This is on a higher time frame. The same thing we can analyze even on the lower time frame. So that's it for today. Hope this was a little helpful, and thank you for watching.